In 3, 2, 1. Welcome everyone to the War Room. My name is Jose Ricardo Tejena, and directly from Dubrovnik, that's right, King's Landing. And I have said so many times when I record these sessions, we still have that lawsuit against HBO because they made everyone think that we're going to find dragons here. I'm just going to be real quick and take a few ideas, put them out there. So today, finally, I'm going to buy the SP 500. I had a couple of missing hit at the range of 2,900. But today, I'm going to show you exactly what we do for our clients. I like to say that we have a few traders, but also we have a lot of clients that they need assistance with their portfolios, with structured portfolios, trading portfolios, speculative portfolios, and from time to time, some guidance when it comes to those quality stocks that you may add at your retirement account. But it all depends because we have clients in Europe, the US, Canada. It changes. At the end of the day, everything that you are going to watch on this video, you can use it, but at the end of the day, we're not liable for this. We're not your private financial advisor. We're sharing this video as a guidance and idea of what we do at Marketers Daily, especially what I do at the War Room. Myself, how I trade, how I allocate my risk, and where I see opportunities. And the way we see trading, just a quick view, is that trading is meant to be just like yoga. It's not for suffering. It's a completely wrong idea about what is investing and trading. Investing and trading itself is by nature speculation, pure speculation. Investing, it has a different time frame, and you're looking for specifics. One of the things, just to clarify, when you're looking to buy a company in the long term, you're looking for a company that may deliver FC free cash flow. FCF free cash flow. That metric is quite the metric, and you need to understand. If you don't understand FCF, you should not be investing. Same in trading. You should understand how to place your stop loss. You should understand that there's XYZ amount of risk that you can take for your position. So today I'm going to talk about going long the S&P 500, and I'm just going to give you an example and what we do. So basically, we're going to take a hypothetical $10,000, and I'm going to explain why I'm going to do that now. And here we go. Okay, so I'm going to just jump and show you the levels I have on my charts. Let's see, where should I start with you guys? And I'm going to go to this one first. So right now, the market is trading at 2,400, give and take 20. That doesn't matter. And last night, we know that the Federal Reserve just did this amazing move on everyone, especially to help the markets. Now, it's true that the cut itself and around the sort of organized crime, because that's what it is organized crime by all these CB central banks, it doesn't matter because what really matters during this virus pandemic, whatever you want to say it, is the fact that supply chain has been affected, and it's not going to work. It's some jobs are going to be lost, a lot of damage in tourism. Think about Paris, Barcelona, London, including the United States. So that's something that you cannot really just patch with a little bit of free money. Nevertheless, you're not here to care about that. You're here to trade. You're here to make money. And believe it or not, right now, lots of folks, they were like, oh my God, I wish I know how to trade. But you don't know, you dummy. Because they think this is a casino. So what do they do now? A lot of people are going to get fired. Just to give you a tip, Scandinavian Air, they lay off, sort of fancy fire in your face without any money. They let go 90% of their staff. That's a lot, guys. And think about if they don't have savings. I mean, we all have to be responsible, but you think about this. Now, looking at this view on the daily chart, let's take a look at, of course, we just go back in time all the way to the bottom of 2018. And you may think that will be it, but you never know. Remember, nobody knows. We do our best to assess risk and understand how much capital we want to play. So hypothetically, I already have with FX Pro, pretty decent broker, and for our clients in Europe, CFDs, they work pretty well. Just going to show you that I already set this. See if I can move. I have to move this a little bit. Okay, so hypothetically, we have 10,000 euros, and some of you in the US, you may want to look for a month SPY call at the level I'm going to discuss. Let me see if I can, where I had it, just a second. This happens when I'm doing everything on the go. Okay, there you go. And I'm just going to take a look at this chart. I'm going to put this on the daily as well. And just go back to the AvaTrade, another company in Israel and in Ireland. Now, what I want to point is the first thing I do, I usually start on the monthly. It's a monthly view. And of course, a close and open below this level will indicate that we are in a recession, but we don't want that. So just make sure I got it correctly. So something here, this level, this is the level, that's the 2320. If we have an open and close, it's over. It's totally over. And I don't have to tell you what is going to happen. It's not only in the short term, it's going to translate in the medium term, ST, short term, and it's going to translate into the medium term. And if that happens, it's game over. We'll probably just go back to 1500. And that's it for the SP 500. So we want to be really careful. And that's what the Federal Reserve is avoiding. And they may not fix it, but they need to patch it fast. And that's the action that they're taking. So I'm just going to remove that. And now you know what I'm looking at. So as far as the real concerning level, a breakdown, open and close below 2300, because that will send us to will activate a lot of algorithms, so we want to watch out for that level. Now, as I said, I'm just going to go back to the daily, and what I look always is a pattern. What is the pattern in place? And look to the left all the way back to 2017. Take a look at this. We have a 350-point drop, and then the market bounce. Again, look for sort of the double in this area, the double bottom, and then continuation, breaking the previous high, made a new high, and then a massive correction in 2018 all the way to this bottom. This level, this price area combined, there's a massive amount of volume executed. So that calls for a double bottom in the long term in a period of about 2019 and about a year, well, 14 months if you want to put it in perspective. Now, what we're looking now is these patterns, these price patterns. There's one, there's another one, 350, and then correction, triple top, and then break, continuation, just the traditional patterns that we have to understand right at this level. This is trend Fibonacci, projection, continuation, tops, previous level, correction, and breaks this level, and of course goes up the way up. Now, in a way, we can say that this is easy, but we need to understand that markets do have memory. This is one of ideas that Ross Mullins, from the head of FX at Market Search Daily, always share. Markets have memory. So if you don't understand this, it's a waste of time that we're sharing with you this information. You need to understand the markets have memory. So the price itself of any asset at some point, either going up, will just retest a previous resistance, and when it's on its way down, it will just retest a previous low. That's basically what it does. Now, at this level, which is pretty much just moving, but what I want to look at this is this range. If that range is 350, and this is in fact the low, I'm looking at 350. There you go. My first resistance based on that pattern, that bearish pattern, actually will be going back all the way to the 2700. So I'm just gonna draw that. Let me just take a look at this level. So we see right now we're on the bearish channel. A couple clients now. We are on the bearish channel. What we want is prices to climb all the way above 2500 so we can retest 2800. But based on this pattern, bearish pattern of 350 points, if in fact we are now placed this level, which absolutely has to be because of the Fed, Then I'm taking 350 points all the way to, there you go, 2,700. So that will be my first target. Now, how do I do this? This is not just tweeting saying this is my target. This is about also understanding how you manage your risk. Let's say I have 10,000 euros. And this is a practice. If you don't practice, if you don't understand what you're doing, just don't do it. But you need to understand how we manage risk. Now, I'm just going to use everything. So I have the CFDs. Probably just going to do 15 lots on the CFDs. I always like to take notes. That's a practice that I sort of learn reading what they do at Ray Dalio's Bridgewater Fund, that it's actually struggling a little bit. And probably just do this. That's my stop loss. And then my take profit, because this is going to be my trade number 1. I'm just going to label it A. Going for the 2,700 level. Okay, that's my first trade. There you go. Now let's see the risk that is involved. Oh, I can see spreads are pretty high. No, it's okay. All right, so I should make sure I have everything on the screen. Let's see, we have it. Okay, perfect. Now let's see how much I'm risking. Always with the CFDs, I have that challenge. I have to recalculate. Let's see, we have it. Okay, so fantastic. So if I'm looking to 2,700, I'm looking for a profit of 3,346. Just clear this out. Okay, and my loss, I'm looking for a loss of $1,400. I can survive with that. I'm looking to lose 14% of my capital, okay, and I'm getting 30%. That's not enough, because if I'm trading, I'm looking at these opportunities based on what the Fed did, then absolutely makes sense that I want to take more risk as I faced this pattern, understanding the 350 point pattern that I'm using as a recovery, and that I'm considering this execution of volume and considering a probable double bottom in conjunction with the fundamental shift of the Fed in flooding the markets, which I was going to use the word inundated, flooding the market with millions of dollars in free money. So just going back, I have that opportunity. I'm going to take another trade. This one I'm going to risk a little bit more. I'm just going to double it. And that's going to be my trade number, second trade, same low. And what I'm going to do now is that, I'm going to repeat the same stop loss. And I'm going to go for the kill. And I'm going to go for another 100 points in the SP 500. And I'm going to explain to you why in a moment. Now, of course, I know there's a gap around this area, but right here in front of you, what you see is that I'm targeting now a previous support sometime during the second half of 2019. At this level, so that will be my second trade, and now I have the allocation. Now on that second trade, let's see if I can get it on the screen. Okay, on that second trade, targeting above $9,000 profit. So I'm just gonna, there you go, $8,000 profit together with the previous one. That will be a total of $11,000. That means that will be taking home double my capital. Let's see if I can have it. Probably in that second trade, I'm losing 3,000. So now I'm at max of 5,000%. Sorry, I will have 50% of my capital at risk on that particular trade. And that's it. That's pretty much what I want to do. So far, so good. It looks like it was working. Again, the technical picture is just pretty much this. We have this double bottom all the way back to the low of 2018. We have the same. I already mentioned to you guys, I have it, I already mentioned that's The break of that level would really be concerning. And I got it on the monthly chart. There you go. Be concerning. And actually, let me do something. Let me change that 2320 horizontal to red, because that's what it is. It's really something to be concerned. So if you also take a look, I'm going to add a few more ideas for you to understand this. Look what happened after this big push. We got it here, 1, now 2, then we went up all the way about 1,070 points. 1,070 points won't be the big deal. What we really want to look is for prices eventually to reach this level, and they will eventually, but now we have to deal with this level, the 2880. That's a critical level. I will talk more about that in future videos, but this is exactly what we do. This is how we take risk. And the way we do this is that we cater to our clients across the globe. We have clients in Singapore, Switzerland, Prague, Canada, Japan, the US, Mexico, Spain as well, London. So we need to give you guys, not only say do something, but also show you how to do it. So if you're in Europe, for example, CFDs are perfect. There are a lot of companies, I don't mind saying names, IC Markets, FX Pro, AvaTrade, who else is out there? Well, you also have Saxo Bank. So you have different opportunities to do this if you're in Europe. If you're in the US, I will be looking at the SPY, some SPY puts for 2,800, something like that, 280. But that will be in the short term, like a month. And I'll already have other options in place, call options. So just prepare yourself, look at these opportunities. And the last thing I want to do before we go, I want to share with you why also I'm buying now. This is what happened last week. This is trend Fibonacci on the monthly view on the currency pair US dollar versus Japanese yen. A lot of you guys don't understand, and sometimes a lot of trading courses, they don't talk about this. The dollar versus the Japanese yen is the number one indicator, leading indicator for you to buy the equity index. If things were to be really bad right now, this thing will be already back to 101. It's just holding the position, of course. The key level here to notice is that we're at the 61.8% Fibonacci, the 106.29. And see the big push? That's tons of short traders, short squeeze. They are the victims. These victims, you are squeezed. That's a short squeeze. It's very difficult to write with this one. So now, if prices hold this, get ready. We're going to continue. This is an amazing opportunity for all of you that also trade currencies. Thousands of dollars, $20,000, $30,000, $40,000 on the table, because we are going effectively all the way to 118. Why? Why? Also because the Bank of Japan, ladies and gentlemen, they're buying. They are increasing their ETF purchases. That means that central banks, they are part of the game. They don't want their stock market just to crash. You know how much money they're going to lose? It's not going to happen. And I'm just going to drop it, but there's another central bank that is loaded. The Swiss National Bank. If you haven't heard of them, you start better actually acknowledging their existence. Those guys, and by the way, I'm just going to throw you another tip. This is the tipping day. Switzerland is the third most powerful partner in the European Union. I maybe think they're the number one. Nobody knows. They're very quiet. They don't make a lot of noise, but they're powerful. Their wallet is deep into the billions, and they haven't reacted. And guess what? They're also equity buyers. So just imagine. So final thought. I'm long. I already have these positions. This is a portfolio that I already sent to clients. It's already in the money. But that's the idea. We have a lot of opportunities now. This is the time to buy. The Fed went in. Of course, Equity indexes still gonna probably choppy for the foreseeable future, but I already have my first target, 2,700, and the next one, 2,800. Again, lead indicator, got it, lead indicator, why I started doing this now is because how prices are behaving. The dollar versus the Japanese yen trading above the 61.8% Fibonacci, trading Fibonacci. I already have my projections, you have it on the screen, and of course, I decided to take a look in the long term at the critical level 2320. If prices break and open below this level, no worries. You're probably going to lose your job and everything is going to the toilet. So don't be sad, don't be concerned. Nothing will be, you probably won't have anything to do. So, but then I look at the daily chart, and what I did on the daily chart is that I look for patterns. And these patterns, as I show you, I'm using this 350-point pattern as now recovery opportunity to have my levels. So, as I said, somewhere at least this is 350. There you go. You go with me, 2,700. Okay, and from 2,700. Okay, somewhere here, 350 more, all the way up. That will be my final level. I'm giving it to you as a tip. Again, I'm tipping you a lot. I'm giving you a lot of tips where to position yourself. But to get there, the market is going to be really tricky. You probably have a lot of fights back and forth. So I decided just to cut it off at 2,800, okay? Because at that point, I will double my account. I will double, well, one of the accounts for, I will double accounts for clients. I will double my account. But this is just a way to see at it. You probably can do it differently. You can probably add more risk. For example, it's already in the money, 33 points. Let's add a little bit more risk. And we will come back to this sample of illustration of the portfolio later on. It's going to drop 40. The low 24.16, that will be my final trade. And yeah, I'm gonna use that target. I'm just gonna leave it there, and that's it. Of course, the risk will be way more. If you consider, I'll probably be exposing the entire account. I'm just gonna take this. Let's see, where's $5,000 right there. I'm just gonna put it. There you go. So now I'm totally risking the account, everything, $10,000. But if I take this $10,000 and I go all the way up, I cover the. You can see that there's sort of like gap there. Go all the way up. I'm talking about. There you go, right there. $18,000 in one single position. That will be almost 180% of my initial capital, plus already another $10,000 estimated. So that will put me around 300%. How long is it going to take? I already have my trading structure in place, so I don't really care. I already have my risk capital. Those are the 10,000. Again, simulation, hypothetical, how to guide you, how to allocate your position, your account. But that's what it is. So I traded my positions, structuring. I'm going to switch into the anaconda mode that we talk a lot. I talk a lot about it. It's about being patient, save your energy. Don't watch CNBC. Don't look at Trump's Twitter account. Don't do that, okay? And now I'm positioning myself. Lead indicator, pattern analysis, a little bit of price rotation, looking at the big picture in the monthly chart. That's what it takes to be successful in trading and investing. And the most important, have no mercy. Take no prisoners, have no mercy with anything or with anyone. Okay? I talk to all you guys soon, okay? Thank you so much for watching this video, and always just go back to our main website, markettradersdaily.com. Thank you. Ciao, ciao.